Carin, we're halfway through the year. So what's your outlook for the second half of 2025 when it comes to equities?
Sure. So, Greg, we expect the markets to be range bound. It's going to be more of a trading type of market where security selection, industry selection is going to really matter. We expect valuations for equities to probably trade between 16 times to 22 times, which is where it is now. And I would say right now, I would probably use a little bit more caution here. But we do expect that the second half, we might be looking forward to some interest rate cuts that would be probably helpful for markets.
How much caution are you recommending? Because the stock market, the S&P, is still near record highs, and there has been a tremendous amount of worry, whether it's geopolitical wars in the Mideast or valuation. So how worried should investors be heading into the summer?
Yeah, no, that's totally fair. I think that I really do think that it comes down to valuations. I'd be more optimistic if we had lower valuations. At Fiduciary, we actually did take advantage when the markets corrected earlier this year to reposition portfolios. And currently, we're actually in a position where we have de-risked and we have some cash and some overweight in fixed income. So we are in a position to take advantage of market dips right now.
And are you taking advantage on tweets, for example? Because it's been very hard to navigate the market year to date because mostly of what's coming out of Washington as opposed to Wall Street.
Yeah, I wouldn't advise that. I think we probably want to separate the noise from actual data, and we're tracking economic data very closely and watching for signs that the economy is slowing down now that we are really in a position to see what the impact from tariffs look like. And as you mentioned earlier, we are in an environment where geopolitical risks are at play, and we're watching energy prices really closely to see if that would potentially be a drag for the economy.
And where are you finding opportunities? Which sectors of the market do you like the most?
Sure. So we're actually more or less neutral on sectors, and it really comes down to industries within sectors. And so, for example, I really think a barbell approach right now makes a lot of sense. We think that AI theme technology stocks make a lot of sense, but I would balance that with lower valuation, dividend, income producing securities. And so, by extension, for example, in the industrial space, we like infrastructure, we like defense and aerospace. Within healthcare, we like med tech. And within technology, I think that semiconductors and software companies make a lot more sense.
And then do you have a view on small caps, mid caps, large caps? Because you mentioned, AI, and I mentioned the S&P. And last check, I think it was 30% of the S&P was in the top 7 or 8 stocks, those magnificent 7. So any thoughts on market cap?
Yes. So from a market cap perspective, we still would favor large cap. In an environment where there's uncertainty, where there is not just uncertainty around economic growth rates, but also a lot of policy uncertainty, I do think that we want to stay large cap, more defensive in that sense, and we're more underweight small cap. But within that, it's really then coming down to where we find the most attractive valuation, and that really takes a lot more of a deeper dive into the markets.
And then finally, because you are saying that folks should be cautious out there, what are your thoughts on cash? Because you're getting paid pretty well to stay in cash right now. You can be cautious and get paid for it.
Yes, so I agree. I think that we have actually some cash in our portfolios from an asset allocation standpoint. As I mentioned, we de-risk at these levels, at these valuations, because we are getting paid to wait and be patient. And I would say that we also think that alternatives actually make some sense in this market, but more of the income producing alternatives like private real estate that are income generating, and also convert arbitrage is also another asset class where we think you have to take advantage of the volatility in this marketplace and be more active and be more trading oriented.
All right. Well, thanks for coming on and talking about it.
Thank you so much.